we're moving now to tax. What should you know as a South African resident regarding tax?
Okay, so without me sounding stupid, you need to know everything. Okay. It's very difficult to know everything though. Okay. And the reality is that the more you know and understand about tax, the more you can see that tax can be your friend. Okay. And submitting to SARS is the best thing you can ever do. Okay. The reality is that not everyone understands how tax works. Okay. Tax practitioners, fortunately, are available in South Africa. People do this for a job. They do this for a living. Okay. You don't have to submit tax returns every year if you're below a threshold. That threshold changes from time to time.
All right.
However, I would still encourage you to submit.
Okay.
Because there are contributions that you put to medical, to retirement, that are tax deductible, which means you can essentially get money back from SARS. Okay. If you earn more than one income, okay, so I'm employed by company A and I've got a photography gig on the side, I then become provisional taxpayer, not a standard taxpayer. Okay, so I'm now responsible for paying some of my own tax over. I'm earning two streams of income. I add the two together, probably going into higher tax brackets. Okay, so just be careful of that. Consider that. I know a lot of people don't declare that income and they get away with it. It's not right to be that way. And understand that if SARS does come a knocking,
you're going to have
you have to pay that back from all those years. Okay, but also understand all the equipment that you buy, all the costs that you incur to run that business are all tax deductible expenses. Okay, so there's two sides to it. And if you only look at one side, it's going to say SARS is ripping me off. But if you look at it holistically, SARS isn't ripping you off. SARS is looking to collect what's owed to them on the premise that you declare what you've earned, but you also declare what it's cost you to earn this money. Let's talk a little bit with regards to tax if you are a standard employee. Okay, so you get paid your basic salary, comes into your bank account, the net amount comes into your account, the gross amount is what you essentially your cost to company, okay, and then the net amount into your bank account. After tax, boom, you use that, you spend it how you feel free. It's the company's responsibility to pay over the PAYE, pay as you earn. Okay, but it's your responsibility as the taxpayer to ensure that it's the right amount. Okay, you cannot check to see that it's always being paid over. That's the reality. Okay, but what you can do is you can check that the amount is correct. Okay, so you can do that. There's many online tools. Okay, you can literally go onto Google and type, how do I calculate what my net income should be if my gross income is X?
Is so much.
Okay. There'll be a calculator there. It's going to give you a very good indication of what it should be. Plug that in, compare it to your pay slip. Okay, yes, it looks about right. Or sometimes different accounting packages will give a slightly different answer. But you just make sure that you can accept that. If you don't accept it, you go take it to your HR or your payroll administrator or your accounts, whatever the structure is, and query it. Okay. And the biggest thing to remember here is that, let's say SARS comes to you and says, listen, you've submitted your tax return, but now you owe us all this money. Okay, and you say, well, why? I've been paying my tax every month. The company pays on my behalf. It's all sorted. Then they go and say, no, you haven't been paying enough tax.
Okay.
You then need to be able to show, my pay slips. There's what I'm getting. Okay. There's the gross. There's the pay as you earn. There's the deductions. There's my net. There's my bank statement that shows my net coming in. The two correspond. It's not me. Maybe the company is
not paying
it over. Maybe the company is showing a higher or lower salary and submitting over. Then obviously the company is going to have some legal issues there. Okay. So how you protect yourself is by keeping that information.
All your pay slips.
Keep your pay slip. And we live in a digital age. Even if it's sent to you physically on paper,
scan to your
take
email,
a photo, scan, whatever. Get yourself a Google Drive account. It doesn't cost you a cent. I mean, unless you want to have some large storage, but then you can pay the small fee, fine. But it doesn't cost you a cent to have. You store it there. You call it tax return 2021, and in there you put all your pay slips. Okay, in there you put all your medical costs. In there you put anything with your money that you spend. You stick it all in there. How much did I spend on retirement? How much did I spend on medical? All these things, and then that will tell you what is then owed back to you. And like I mentioned, I've always got money back from SARS. But it's because I've always been able to declare all my income, and I've always been able to declare all of my expenses. Okay, obviously having different streams of income means that I have different streams of expenses. Okay, and all of those expenses, as long as they're contributing to making that income, are tax deductible expenses. Okay. Just be careful. If you are a salaried employee, and you just earn one salary, you cannot claim expenses for that. Okay. Unless it's part of your agreement. So there's a commission aspect that you've got to then spend money on a cell phone or laptop or something to pay for it. If you're a provisional taxpayer and you're earning multiple streams of income, you can do that. Okay. It doesn't have to be big streams of income, but multiple streams of income. Okay.
Would something like a very small side hustle where you buy and sell, would you consider that as something that you need to declare, or it doesn't fall?
You should.
The threshold?
The reality is you should.
Regardless of how much.
So let's say I'm earning 15,000 Rand a month salary at my employment. That's 180,000 Rand a year. Okay. That's my gross income. Let's call it my taxable income. There's other aspects to consider, but let's just, for simplicity, say that 180,000 Rand is my taxable income.
Okay.
Then from this little side hustle, I then make 40,000 Rand profit in the year. Okay. That alone is below the tax threshold. Okay. But I take that and I add it onto the 180. Now I've earned 220 this year. But I need to pay tax. I paid tax at work, but that extra portion I haven't paid tax on. Okay. The extra portion by itself, if I wasn't earning an income at work, is below the tax threshold.
So you would not have to.
Yes. But if I'm doing that and I've got my salary, I've got to combine the two.
And in that one, I think maybe transport would be something that is an expense. How do you declare that?
So whatever it costs you to make those sales, from telephone, from if you rent a place and you've got a storage portion, fuel to whatever it is, whatever you can show a cost for, it's tax deductible on that.
Okay.
So you need to understand that if you declare the income, there's got to be expenses that have been incurred to achieve that income. Okay. And remember that income is going to be, I made gross sales, total sales of say 80,000. The cost of the items was 40. I've made my 40,000 Rand profit. Okay. But then I've also used my cell phone. My cell phone cost me, I don't know, a couple hundred Rand a month. And of that, I can say 50% of that is for running that business. I rent a house. The house cost me 5,000 Rand a month to rent. Of that, a certain percentage is where I store my goods. You then put all of these numbers together, and then all of a sudden your 40,000 Rand profit is only now 10,000 Rand actual profit. And that's the extra portion that you need to pay.
Add to that 180.
Correct, Okay. So whilst you are a small enterprise like that, I can pretty much guarantee SARS isn't going to come and say what's going on here. But the goal of doing that kind of enterprise is not to stay small. It's to grow.
You mean to grow.
So create those good habits from the beginning. So when the growth does happen, they don't come back and look at from 15 years ago, and now you've got to start
paying from
trying to work out what happened there. Remember, your bank statements and your bank history is going to be available. If SARS wants it, they're going to get it. It's the reality.
Okay. On the SARS, when you do your filing and all of that, there are other aspects that people do not know of. You just mentioned that your medical aid. What else can you put there?
Okay, so if we're assuming that you're just a normal salaried employee, retirement contributions, medical contributions are the biggest ones. Make sure you've got those. If you are someone who's earning multiple streams of income, any cost that goes towards producing that income, as long as you can put, there's a section there which allows you to put it into different categories, and there's an other section. If you put the other, they'll generally ask for proof of the other, and then you have those slips and all those invoices, and you send that through, and that justifies and confirms it. So from if you're earning a basic salary and it's set in that way, your options are pretty limited. It's medical and retirement really.
What about things like renovations and that?
So now that's your income that you're earning from renting your house. You're talking about that, or
no? I mean in your own
okay.
house.
So this is a whole different topic. This is more about now you're going to sell this house down the line, right? So as long as your profit on selling the house is less than 2 million, if it's your primary residence, there's no tax. Okay.
Okay.
If your profit is greater than 2 million on selling the house, then there's capital gains that need to be accounted for. Okay. A percentage of the gains is included in your capital gains. Okay, percent of the profit including your capital gains, and you pay tax on that. All right. However, if over the years you've done renovations and that's cost that you've incurred, that then becomes tax deductible.
Okay.
Okay. But you must show the invoices for that. You must show the receipts and you must show the payment to show that that actually did happen.
Okay.
Okay. So take an example where you bought the house for, let's say, 500,000 and you're selling it now for 3.5 million. You've made 3 million in profits, but you spent 1.5 million on upgrading it over the years. Your cost wasn't only 500,000. Your cost is actually 1.5 million plus 500. That's 2 million. You sold it for 3.5. You've actually only made 1.5 million in profit. SARS doesn't need anything from you, but you would prove it.
Okay.
But now if you can't prove it, SARS is going to say, well, you made more than 2 million in profits. Portion above that doesn't all belong to them. Okay, but they want a portion of that now.
Okay.
Capital gains tax, there's an inclusion rate. You pay tax on that portion.
Okay. So in that case, you don't get money back, but you kind of prevent
you ensure you don't
spending
pay
it.
so much over.
Yeah.
So in that case, if you're making such a large profit on a primary residence, I would 100% consult with someone who can tell you what you need to put together, because you can fall very short there and pay tax unnecessarily.
Okay.
Because remember, when you're going to sell that place, you're still going to pay the seller's commission. You're still going to have some fees involved there.
Yeah.
The last thing you want now is on top of that having to pay tax you didn't expect to pay, and you shouldn't be paying if you documented it all.
Yeah.
Again, if you haven't documented and you haven't kept those receipts and invoices, well, maybe you can get them from some of the suppliers, but if you can't, unfortunately, tough
You're gonna
luck.
pay.
Yeah.
And what about annually submitting those receipts? Let's say you do renovations in 2021, and then when you file again.
So there will be no need to do that because there's no income received on the other side. So so submitting those annually, these renovations that you could do at your house, if it's my primary residence, there's no benefit to doing that. Unless I'm getting an income from.
So if it's maybe a house that you're renting out somewhere,
100%, yeah. So then what you do, so let's say it's a house that I've paid for. The bond is done. It's freehold. I've owned it, and I'm getting a rental amount on a monthly basis. That rental amount, less any expenses I incur, is what I pay tax on.
Okay.
So let's say I'm renting it for 5,000 a month, 60,000 rand a year, and let's say that 180 again that I'm earning on an annual basis. Take that 60,000, add it to the one. I now earn 240. That's what I should be paying tax on.
Okay.
But then I say, no, but hang on, I've renovated here, I've fixed there, I've paid these levies, I've done all this. That came to 45,000 rand. So now I didn't earn 60 now, I've earned 60 less 45, I only earned 15,000 rand profit. And that there is what I need to declare. But I declare the 60 and I declare the 45, and then I show how that 45 was made up. Okay. So that's on an annual basis. Okay. Now comes time to selling that place. I can't then go and declare those costs again. Okay. But if I redid a room or something that cost a large lump sum, substantial amounts, and I don't put it in on an annual basis, I can then save that for when I sell the place for more than what I bought it for. I can put that in and say, no, I did this renovation for, say, 100,000. I'm making 300,000 rand profit on this place. It's 300,000 rand less that 100,000. So I've only made 200,000 rand profit here.
Okay.
You can't have your cake and eat it. You can't use something for two different purposes.
Yeah. You must pick one.
Just becomes tax fraud. Yeah. And obviously there's limitations of how you can pick as well. Okay.
Yeah.
Yeah, that's more detailed. Yeah.
Is there anything else regarding tax that we often neglect?
Sure, there's so much regarding tax. I think the biggest thing we need to remember is submit your tax returns. Make sure it's submitted, okay? And understand that if you are open and you have all the information available, SARS can be your friend. If you're trying to hide things, they may not catch you, but when they do, then they're going to start looking and they're going to find. We live in a digital world. We leave a digital trail everywhere we go.
Yeah.
SARS will fund it.
Yeah.
So just submit it, sleep nicely at night, and carry on. Yeah.
Okay, thank you. We're moving now to our shopping segment.